Good day, my name is Dean Crocker and I'll be taking you through the latest EIA completed on Sanlam. On the 11th of March 2021, Sanlam released their full year 20 results, in which they reported net operational earnings were 23% lower at 8.45 billion, new business volumes at 25% higher at 311 billion, whilst the value of new business was 16% lower at 1.9 billion. Pleasingly, the net fund inflows did increase by 8% to 61.6 billion, whilst the group equity value unfortunately declined by 8% to 59.2 cents for 59.20 cents. This translated into adjusted return on group equity value of 2.7%. The group declared a final dividend of 300 cents per share, which was 10% lower than the respective period. From data release, the share price closed slightly higher relative to the JC Cap Strix. This was a slightly positive reaction by the market. We couldn't really read much into it. However, since the beginning of the year, Sanlam has really underperformed the JC Cap Strix by 16.2% with a year-to-date performance of negative 5.8%. Since November 2020, which I think was the last EIA release results date, Sanlam has underperformed the JC Cap Strix by 12.3%. The total return since November 2020, however, is positive at 10.33%. In terms of the measures, and you can see in the mean revision table found below, the group does scream undervalued. It does scream fairly cheap, and it is cognizant of the market or reflective of the market pricing and all the negative news, which the company is impacted by. It translates from a really difficult time given COVID. There's a lot of uncertainty within all the various corporates. There's also a lot of uncertainty around actuarial assumptions. They have been very conservative in nature, which has resulted in the lower earnings and respective lower return on group equity value. The group, however, does remain relatively resilient with a strong balance sheet, and the equity market performance has improved of late. So just looking at the assessment, net operational earnings, they did report an increase in mortality claims and significantly higher doubtful debts. As I alluded to, the actuaries and management were very conservative in nature. New business volumes did increase by 25%, which was positive, to 311 billion. However, the new business declined. The value of new business declined by 16%. Net fund inflows increased by 8% to 61.6 billion, which is better, probably favorable in comparison to some of the other peers which didn't report any net fund inflows in their last reporting period. The group equity value per share did, however, decline by 8% to 59 Rand. The adjusted return on group equity value was only 2.7%, which was really low, and this was really impacted by higher persistency risk and the impairment of Sanlam and Shriram, and the decline in Sanlam share price. Full year 20, the dividend per share declined by 10% to 300 cents per share, and the mortality claims did oversee a significant increase, and this is really applicable to COVID. And the excess claims totaling 531 million. There was no negative impact through the income statement, as it was covered through the impairment or the pandemic reserve. And the return on group equity value per share was negative 2%, relative to the group's target of 13%. So you can see that the group really did underperform their target as well as the previous financial period, and it's something that they'll look to rectify in the near future. The adjusted group equity value amounted to 2.6% as spoken to previously. Sanlam Asset Management, the solvency coverage ratio did however decline from 211% to 291%. And Sanlam sold 25% of the shareholding in its third-party asset management business for a total consideration of 817 million, and this was sold to ARC Financial Services. And there's been quite a bit of corporate activity within Sanlam over the last period. They've acquired a larger stake in Sanlam. They've also done quite a bit of a group restructuring in the sense of the asset management business being sold to ARC, and then Sanlam acquiring a respective stake in an ARC Financial Services business as well. I have discussed that further in the EIA, so please refer to that for further details. There's quite a few transactions that Sanlam is involved in. On the back of all the news and the negative news within the market, we feel that the that it really has been priced into the share price right now. The group remains sound in terms of their balance sheet. They are one of the largest, if not the largest, insurer in the country, and they are becoming quite a monopoly in the sense that they have diversified across border, and they have quite a wide geographic revenue, and less risk in that sense, so great diversification. The group is, however, in the midst of a pandemic, which should have a direct impact on them, given that anyone who is within business continuity claims, anyone who has passed away, or anyone who is disabled to the extent they cannot work will be claiming from the insurers. They thus have taken on great provisions to cover that. And to be fair, the business of a life insurer or an insurer is to pay out claims during times of difficult or in times of need. So the share price does reflect that. We feel that the group is sound enough to sustain and see through the period. We, on the back of that, do feel that they are undervalued and potentially offer quite a decent upside. And on that, we maintain our overweight recommendation. We are, however, cognizant that the realization of a nice return to normalized levels or return to previously trading levels does require quite a significant change within the economic environment of South Africa. So there is some headwinds to our recommendation, and we are cognizant of those headwinds, and I think that's the most important component. If you'd like to place a trade, please speak to your financial advisor. Alternatively, you can speak to our trading desk to assist you. Please take note of the disclaimer, and have a good day. Thank you.